barring some type of exogenous event that just really crushes the markets over the next few days. Markets tend to be a little bit sloppy here. That should get us, kind of set up for the seasonally strong period of the year as we get ready to go into October, November, December. But here's what you need to know before the bell this morning. The market was down on Friday, actually a little bit over 1% on Friday. And we did take out the 20-day moving average. So the market was above the 50-day. We took out on Friday both the 50 and the 20-day moving average on Friday. Friday was a bit strange because it was the largest options expiration that we have had on record. It was a very, very big options expiration day, which means a lot of stocks had to be sold. There was a lot of puts on companies. Those had to all be rolled over. And so that created some outsized volatility on Friday. The good news, if you want to call it that, is that the market is sitting right on support of this consolidation pattern that we've now been in here for the last couple of weeks. And again, as we've talked about before, we're in that kind of seasonally weak, sloppy period of the year. And we've been kind of grinding through that. So that has gotten the market, heading back towards a bit oversold. We're sitting right on a potential sell signal right now for the market. So the market needs to kind of get some footing under it today, tomorrow, this week at least. We need to keep this market kind of holding in here at this point. Unfortunately, for the next day or two heading into the Fed meeting, markets are going to kind of be positioning ahead of that meeting. So some additional weakness over the next couple of days would not be surprising at all. But again, we're not at a disastrous point in the markets. We'll certainly have some weakness here, certainly expected because that's where we are this time of the year at the moment. But the market still remains in a very nice kind of bullish uptrend here. There's really not a lot to worry about. The market could pull back to around 440. Which is kind of some of this previous level of support that we had during that August decline as well. So we had that decline back in early August. The market bounced. We've been consolidating here for the last week or so. A little bit more weakness here, potentially going into the Fed meeting, would not be surprising. But overall, not a whole lot to worry about here from the return of a bear market, so to speak. The MACD indicator, yes, we could trigger a bit of a sell signal. That could be a little bit weaker here as well if the market does begin to sell off, but we're already at fairly low levels, so there's not a lot of downside risk to the markets currently, but it's going to be a little bit kind of boring for the next few days. I wouldn't expect a whole lot of fireworks. Potentially if the Fed comes out, says something more dovish, we could see the markets pick up from there. But again, most likely we'll get moving into October. And then once we get into October, we have quite a few things that start to go on. First of all, positioning is bearish on the markets. And again, sentiment of professional investors also very negative at this point. So that provides fuel for that kind of year-end rally. A lot of professional managers, portfolio managers, et cetera, need to play catch up by the end of the year in terms of performance. So there's going to be some buying coming in, particularly in some of those kind of headline names that they need to have on their books by year end. So again, there's going to be some buying impetus there in October, November, December for that. Also, you're going to have roughly, once we get through earnings, which kicks off the beginning of October, once we get through earnings, the buyback window for companies opens back up, and there's roughly $5 billion a day in buybacks that have to be completed by the end of the quarter. So there's going to be some buying power as we get into October, November, December. Now, this doesn't mean October the 1st, the market's just going to take off running. That's not what that means, but this sloppy period that we're in is likely coming to a close here over the next 2, 3, 4 weeks. We could go a little bit into October with some of this weakness, potentially if the market does sell off here over the next few days, continue to try to, kind of slop around and trade a bit. But once we really start to get into November, earnings get behind us, then November, December tend to be seasonally stronger 2 months of the year. So again, kind of want to be watching that for a positioning standpoint, but that's what you need to know before the bell this morning.